So the later you buy a term insurance, you are actually in a more vulnerable period of your life. A 10-year delay can cause as much as 50% difference in premium.
What is life insurance and why is life insurance important for me?
It's a contract between an individual and an insurance company. And what that contract says is that I am promising you as an insurer that if something were to happen to you, your dreams, whatever you are planning financially for your future, for your family, does not go away with you.
And this is a regulated industry, right? Udbhav, you just can't reject a claim, correct?
Your claim will not be rejected if at the start of the contract you have been absolutely truthful in disclosing about your health.
How do I figure out what premium, what coverage is optimal for me?
So you should definitely not look at just the cheapest, look at the brand, look at their past performance in terms of claims payments. Typically, we believe anybody should have life insurance worth 10 to 15 times of their annual salary or annual income.
So is that true that your premiums are subject to change year on year basis your health? Hello everyone, this is Khushbu Agarwal, founder at Zyla Health. Extremely proud and honored today to introduce you to our guest of honor, Mr. Udbhav Gupta, my mentor, also an esteemed client at Axis Max Life Insurance. Udbhav, welcome to Zyla Conversations with Zyla and our podcast today.
Thank you, Khushbu. Pleasure to be here.
Thank you so much. Today we are going to speak about something really not so much spoken about, which is life insurance. The topic of the podcast is Securing Tomorrow, Decoding a New Age Life Insurance Experience. Just to introduce Udbhav to everyone, Udbhav is the Executive Vice President at Axis Max Life. He has spent 13 years at the company and has over 20 years of industry experience. At Axis Max Life, Udbhav leads number of initiatives such as protection, health, NRI Business and others. Udbhav is a firm believer of health and wellness as a growth story in life insurance and ensures that Axis Max Life stays innovative and youth-focused. As I said, Udbhav has also been an amazing client partner. He has been an early believer in the outcome-based empathetic care approach we take at Zyla, and it's such an honor to associate with you, Udbhav, and team.
Thank you.
Great. So with all of this great experience that Udbhav brings to the table, I'm very happy to start today's conversation. Udbhav, we'll first talk about something which is a big unknown in the market, which is really, what is life insurance and why is life insurance important for me? So what is your layman answer to this?
So from a very simple perspective, life insurance is just a contract. It's a contract between an individual and an insurance company. And what that contract says is that I am promising you as an insurer that if something were to happen to you, your dreams, whatever you are planning financially for your future, for your family, does not go away with you. So effectively, in that uncertain event, if it were to happen, this contract is giving you that peace of mind, that security. So in essence, that is what life insurance is.
Correct. So I want also the users to understand that, there are a number of financial products out there. It's really an investment, end of the day, with a promise of a financial security if some unfortunate event happens to you, right? In the presence of other products such as mutual funds, crypto, or fixed deposits, where does life insurance really stand, and how do you prioritize one over the other, Udbhav?
Yeah. So this we get quite a lot, Khushbu, that this understanding the entire ecosystem of the choices, there's all sorts of investment products available. There is life insurance and then there's health insurance. I think if we stick to the basic, which I explained earlier, it's actually not a difficult thing to segregate these two because in essence, life insurance is not primarily an investment tool. What life insurance is actually what we like to believe is actually a bedrock. It's a foundation of any financial plan which an individual would want to do. So think of it like you're building a house, right? And if your house and the multiple stories among it, and let's say the decor, the paint and all, think of them as the financial investments you do for your future. right? So you invest in, you have a life goal after 20 years for your children's education or anything. Think of those, and then you are investing in equities, mutual funds, etc. All of them are really that house. But what is the foundation of that house?
Is life.
Foundation of that house is actually a life insurance. You can call it an investment, but it's not an investment. It's a foundation. It will never be visible, giving, let's say, that daily pleasure of looking at your paint or your bedroom or your living room. But if that foundation is strong, the house can sustain well into the future.
Right.
So you actually would do well not to compare a mutual fund or a life insurance. A term insurance contract, which is that promise, is actually the bedrock of any financial planning, because you cannot have your future plans for your family be a victim of any sudden accident or a eventuality with you. So you need a life insurance to kick in, and that is why we see it as a bedrock of real foundation of financial planning.
So that seems quite intuitive actually, Udbhav, and something that everyone should be thinking about and going after. And yet our country is quite underpenetrated. You would maybe have the exact numbers off your head, but why is that the case? Why is the country still underinsured? What is holding people back from buying such a foundational product?
Yeah, you're right. Actually, once you start understanding the real value and the positioning of it in your entire planning, you would believe that it's the obvious choice, right? Actually, it should be the first investment or a financial choice anybody makes.
Right.
But the reality is that India and many countries are still very little penetrated in terms of insurance. So we see, you would read reports that insurance penetration in India is mentioned in terms of a GDP number. Let's say 2.8 to 3%. I personally don't find it very intuitive to say, is it good, bad? I can't really GDP and all the heavy words. How we want to see it is a concept called mortality protection gap.
Okay.
It's in the industry. Some industry leading companies have done research around it.
Right.
So what mortality protection gap is about is saying, just like I said, for your future, you have certain objectives, obligations, liabilities. What is the amount of money an individual needs for that? Let's say that is X. And what is it that you have today in terms of your wealth, assets which you have built? Let's say that is Y. So this gap between X and Y is a mortality protection gap. Because if something, mortality as in very simple terms is death. So if a death circumstance would happen to an individual, what is the gap of the aspiration versus what the family has today?
So it should be least possible.
So this has to be zero, if ideal word,
Really?
right? In India, that is right now a staggering, around, give or take a number, 80%. So the gap, mortality protection gap in India is around 80%.
So the proxy is that only 20% people have some adequate coverage.
Or whoever has is only 20% covered
enough
for the gap.
Yes.
Now, that versus, let's say, the best economies which we believe have insurance penetration over the years and all, let's say Hong Kong, Singapore, these Asian economies, these come up. Even they have a gap, but much lower. They are around 40%. That means their economy is around 60% covered.
Correct.
So 60% covered versus us 20% covered. So we say we are maybe as a country only 1/3 of perhaps an ideal level. So that's how I like to see that this is the gap. It's very, very closely related to what at Axis Max Life we do. So we have been on this journey for around 7 years in terms of understanding what the country feels about being protected. Right? So we do a proprietary study called India Protection Quotient. Yeah, it's called IPQ. We are into 7th edition now. So we have been doing it since 2019. Wow. And in that we measure how India progressively feels about, let's say, awareness about protection, term insurance, ownership, overall, let's say, attitudes and comfort around feeling protected. So there we find that progressively the awareness has increased a lot. So in terms of the survey, we do it across 25 cities, 4,000 respondents and all. Awareness level is around, on a scale of 0 to 100, which we measure, it's around 74. So there's a lot of awareness around term insurance.
And that has improved over time.
That has improved over time, right? But ownership still struggles. So ownership, when we ask people about awareness, there's 74 out of, perhaps just to feel it, 74%, roughly 3/4 people are aware that term insurance exists. But awareness is not leading to ownership. So the ownership is lagging at 34.
Wow.
So it's less than half. And that is really the crux, that if it is so important, if it's a bedrock, why is an individual not making that step? And primarily the answer which comes is affordability. So people have, which we survey in our IPQ study, they have mentioned affordability is the biggest hurdle to purchasing a life insurance.
So, Udbhav, just double clicking on that, right? Because, see, anytime we don't buy something, intuitively one can say it's affordability. But at the same time, there are enough people in the country who are doing luxury travel, they have
Yes.
luxury cars, they have luxury assets, right? Also, people are insuring their house and car and property loans before their own life. So, do you think this is also an inherent human tendency of being optimistic? That nothing would really happen to me, or death is a very far off,
Yeah.
improbable scenario that leads to this, apart from affordability?
Yeah. So affordability, I think, is an easy answer to
Yes.
give, right?
It could be a scapegoat, right?
Yeah, yeah. I'll come to the affordability part later, but addressing the aspect you mentioned, which is about, I think it's like psychology, right?
Right.
So death or a life insurance, you don't live to see it in front
Right.
of you, right?
Right.
And that's my take personally, that
Yes.
you might see a house burning down in your neighborhood,
And you have to face it.
and you are seeing it happen,
Yes.
and then you say, oh, this is important, right? You can see a car accident happen,
Okay.
but you don't see yourself die and look at, okay, I have died, right? So
But
maybe
people
that,
do see, other people in their family or friends suffer, and
Yeah.
then if something happens unfortunately to them, their families suffer.
true.
But that you're saying is not as much of a.
Yeah, it's intuitively that should also be equally worrying to
Yes.
people,
Yes.
right? And actually we saw during COVID, when people saw that otherwise healthy young people could also fall prey to the, let's say, uncertainties of life. We saw the awareness as well as ownership of term insurance increase. But again, I think the lethargy or the mundane life kicks in.
So
and
you saw an
We
uptick
did,
during the
yes.
COVID period,
We did.
like to what level, to what extent?
2x.
2x.
Yeah, actually, we have seen 2x just after the latest GST reforms also. The number of
Okay.
searches around term insurance, the number of people buying.
Because you have some tax implications
Yeah.
which are positive now.
Yeah. But yeah, I think just people keep discounting the possibility of them dying. So they value a car insurance or a house insurance before life insurance. And that is
Yeah,
actually
that is unfortunate. The unfortunate reality. And what about life insurance for your immediate family? So, for example, for your spouse, for your parents. How about that? Is that also a distant thought?
So life insurance, typically, the life which gets insured needs to have, let's say, a reason to get insured. That's how we see it in the industry
Right.
parlance. That what we call insurable interest.
Okay.
So
that you are the breadwinner. Or,
Yeah. So anybody theoretically has an unlimited interest in their own life.
Right.
But you would take an insurance decision depending on the obligations or the dependents on that life.
Got it.
So anybody who has, let's say, liabilities, is earning, so that way, in a way, some future financial goal is linked to their life, is insurable.
Got
So,
it. Got it. So we discussed about this, you don't see yourself dying or you're over optimistic. We discussed affordability, which can be a reason for any purchase.
Yeah.
Any other reasons which you think are hindering the Indian audience particularly,
Yeah.
Udbhav?
So, yeah, I think it's this entire mentality of just, they still tend to see it as an investment that
Right.
and in a pure term insurance contract, as I explained, it's a contract is if something were to happen you over a certain period of time, the time period you decide when you buy a product. So let's
Correct.
say you're buying till age 60 for the next 30 years, let's say, if you're a 30-year-old. If something were to happen to you over 30 years, the company will pay the agreed amount to your family, to your nominee, so that your financial goals, which you set out as a family together, do not fall flat. if 30 years pass and thankfully you do not encounter the death scenario, the contract ends, right? Now, for a lot of people, that is a bad investment.
Right.
Right, so they see it as, oh, nothing is coming back out of this contract. It's an
Okay.
expense, right?
Okay.
We do not see it for a lot of other choices we make, but somehow for life insurance, because you do not, life insurance is something not we would expect like a car insurance, right?
Correct.
You will claim it perhaps every 2 years. You will see the value coming out.
Also,
Oh,
car insurance is mandatory, so I think that
yeah.
becomes a very different
Yeah.
ball game.
So I think that nothing comes out of this expense which I am doing is a mental barrier. But again, just like I said, that if you think of it as a foundation of your house, you would not, let's say, not have a foundation before you start building a house. Similarly, I like to see it as, let's say, cars. We are on a topic of cars.
Right.
So let's say airbags, right? You would want to take a car which has airbags.
Correct.
Right. But at the end of a year, or when you sell off a car, let's say after 5 or 7 years, you wouldn't say that my airbags went waste.
Yes, I didn't get any ROI.
I didn't get any return on my airbags. Oh, they never blew up. Right. You were thankful that I didn't get into an accident.
That's a good analogy, yes.
Yeah. But somehow we don't see that, oh, great, I didn't utilize my life insurance. It's great you didn't have to utilize it.
Yes.
But I don't know why for this thing we tend to get again caught up in that scenario that why it's not giving me any investment. I think it's just, to me, it is just because you never see it that often, and you perhaps don't believe that you would perhaps be equally vulnerable. If generally it's a myth also sometimes that people believe I am young or I am healthy. So yeah, it's a very, very unlikely scenario. It takes a COVID or a mass event like that to shake us up. But again, we tend to fall into that. And that's why you require consistent knowledge, consistent reiteration of the value of term insurance. It's a fantastic product and the baseline of any financial planning.
Got it. No, they were very clear. Thank you so much for sharing those insights. Also, we discussed some philosophical reasons why one should buy life insurance, term insurance. Now, giving some tangible reasons to our users so they can take away something from this conversation as well. When we did a small survey with few folks before this conversation on what is the number one worry you have in your mind if you go about a decision of buying term insurance or life insurance, and they said, I don't know if the claim will be paid out later.
Yes, that's correct.
What is the guarantee? Is it a fair deal? What is your answer to that, Udbhav? Because I think if we can build comfort around that, overall also helps people understand that yes, eventually death is an inevitable scenario.
Right.
Unlike a house fire or a car accident, it's an inevitable scenario.
Correct.
So if my claim is guaranteed, why will I not go and buy it? So what's your answer to that assurance for claim?
No, it's a fantastic question. And when we listen to our, let's say, sales calls recordings of when a advisor is having a conversation with a prospect for life insurance, beyond the price, which is the affordability angle, a lot of people are still able to cross that, but the worry in their mind is about claim. So if we do a word cloud actually of our sales conversation, this claim, how will we claim, will be paid? I think it comes out as a very, very prominent item on people's mind when they're buying, and rightly so, because the entire proposition is banking on that day when it will be required and that promise to be fulfilled, and the individual won't be around. So in a way, you are trusting someone X years into future to deal with your family in that vulnerable moment.
When you're not there.
And you are not there.
Yes.
So it's a lot of trust,
Absolutely.
right? It's a matter of ultimately trust.
Correct.
And just like you won't trust anybody to say, I'm just putting an airbag in there. You would want it to work when the time comes, right? And you would want faultlessly. You can't say, okay, it may or may not work. Yeah, it's it's unpredictable. So you would want certainty, you would want assurance. And we actually absolutely understand it. And there is no reason of being in the business if we can't be true to that moment of truth.
Yes, you're not doing this for 2 years. You're doing it for decades.
Yeah. So this entire trust, or what we call in our Axis Max Life parlance, bharosa, we actually take this number, that how many claims do we honor, as the number which actually is a testimony to our brand. So our brand stands around what we call India ke bharose ka number, which is
Very
the
nice.
claims paid ratio. How many claims come to us and how much we pay. And our sales growth and all, they take care of themselves up and down. This is something which every employee just absolutely prides themselves on. So we are trying to push the boundaries on this front every single day.
And this is a regulated industry, right, Udbhav? You just can't reject a claim, correct? If I'm not wrong.
Absolutely. So that's where I think the understanding as a prospect or a customer
yes.
you need to have, that your claim will not be rejected if at the start of the contract you have been absolutely truthful
Okay.
in disclosing about your health. Any contract, a little less in health insurance, because health insurance gets renewed every year, so
Correct.
to say. But in a life insurance, which is a very, very long-term contract, right? Typically, our contracts would not be less than 20, 30 years. And ultimately, it's a contract of trust. Trust on your part as an insurer that you will honor the claim. But when we ask an individual question about your, let's say, medical history, about your occupation, about your family's circumstances, all those are related to how we assess you before we take the contract on. So if I were to say 99.7 is why is it not 100? Is it claim not guaranteed? This 0.3 leakage, so to say, primarily happens because of non-disclosure.
And you try hard to ensure it is 100% at the beginning.
Absolutely. So
Got it.
if you have disclosed everything truthfully, there is no reason why a company will reject your claim.
And why would someone not disclose everything truthfully?
Exactly the point, that if they were trying to take advantage of the contract.
Okay.
So let's say, and
lesser
that is
premium or something like that.
not lesser premium. It's just, see, life insurance contract, typically, let's say, I just take a term insurance example. You would, let's say, for a 1 crore term insurance, which we call sum assured, the promise what we'll pay you on death. Typically, for a average age which buys, you would pay maybe 2,000 rupees a month.
Okay.
Right.
So you're saying you're trying to shorten that payment.
So if you are aware of something in your health scenario,
Got it.
which makes you believe that I am already very vulnerable to dying, let's say, over the next couple of years or something.
Right.
And if I were to buy a life insurance contract, this 2,000 or maybe 4,000 after 2 months, or maybe 20,000 in a year, I can get 1 crore.
And but you're saying this is a 0.3% scenario, very rare.
Very
You
few
don't-
people, yeah. So overall claims, after 1 or 2 years, anyways, most of our claims would be 100% paid.
Got it.
So the amount of claims paid is always related to the quality of disclosures which we have at the start of.
Yes. Honestly, I think Udbhav, the market is not aware of a 99.something%. And I'm sure if you are at this,
I think as an industry, it's not
your
just
peers are, I'm sure, at a similar number.
Absolutely. The
So-
industry has done a fantastic job in life insurance. I think on health insurance, sometimes people struggle to make the difference between health insurance and life insurance.
There were a couple other themes, Udbhav, and these are just coming from some micro surveys in markets. Of course, yours is cross-India sort of surveys, the insights you shared. Is that, if I have an illness, my premium would increase and then it's not in my control. I've already invested so much in this policy for a long-term gain later, and I can't just switch or stop, right? So is that true that your premiums are subject to change year-on-year basis your health?
So this concept of, let's say, what we call reviewable premiums, right? Premiums changing every year or every 2 years. This is a concept which happens in health insurance. In life insurance, actually, and it's a very large guarantee which we have to give as a
Right.
life insurer. We have fixed premiums
For life.
for life. Any contract which we do on term insurance, let's say, because that we are delving deeper on, whatever premium I will quote to you today as a 30-year contract or something, then is a promise. If tomorrow, even if you were to fall severely ill, develop a disease, you become diabetic, but you were not at the start, your premium won't change.
So you're saying irrespective of age bracket change, irrespective of someone having a cancer, the premiums do not change. If it was not there at the time.
Your premium is dependent on your age, on your health, at the time of buying the policy.
So then it makes more sense to buy it as early as you can.
Absolutely, absolutely. So and it increases a lot, and it is just a financial or mathematical concept that the probabilities of you dying increases with age.
Of course.
Right. So the later you buy a term insurance, you are actually in a more vulnerable period of your life. But if you buy it at the beginning of your earning life, when your liabilities effectively dependents have started, it's actually very, very cheap. And a 10-year delay, typically, just a broad rule of thumb, a 10-year delay can cause as much as 50% difference in premiums.
Wow.
Yeah.
These are fantastic insights, Udbhav. What you're saying is that claim is almost guaranteed. It's 99.7%. And your premiums don't change if you buy it as a 20-year-old, 30-year-old. Even till, the time you're 70, 80, even if you develop a cancer, you're paying the same premium.
Correct.
And getting your, guaranteed money at the time of an unfortunate incident.
That's right.
And the third interesting insight that we had, and these were more from the younger folks, is that I need money right now. So whatever I can take out from my take home and invest back in an instrument, and that's how people think about it, right? An investment. I want some money coming out every year. Right? As something which, compounds and comes back to me. So are there any products in life insurance, under the life insurance umbrella, which give people both a protection for life and also some benefit in terms of, their money growing year on year and they recouping it?
Yeah, of course there is. So the life insurance industry, beyond the basic term insurance which we talked about, also has products which then combines the house and the foundation.
Yes.
Right?
Yes.
So you would have, and on both types, some people prefer predictable guaranteed investments, right? Like as an individual, and I guess everybody has a mix in their portfolio, right? You would invest in fixed interest products like FDs, or you would take bonds if you want, and you would also invest in riskier instruments like equities or mutual fund. Those are all your investment decisions. You are building the house. So with life insurance companies also, there are products which give you both foundation as well as the house, and it's easier sometimes to have just one instrument do both the jobs.
Right.
And there are two large categories of products in this space. One is what we called endowments, right? These are very, very popular for, let's say, a little bit of a elder population because they prefer guarantees. If you were to prefer guarantees, so this product will give you a guarantee of a life goal. If that is your goal, that okay, in 20 years I want a certain amount of corpus to be available.
Even if I'm alive.
If I am alive. So there would be a corpus outgo at, okay, you survive for let's say 20 years and you pay a premium, which is your investment into the product for every year, whatever is the contract. You would accumulate a guaranteed amount at the end of that period. And if within that period, of course, the life term related eventuality happens, you will get a sum assured as well. So for some people, it is easier to digest that, okay, I'm able to get something at maturity or at the end also. Of course, the insurance part tends to be smaller in this compared to a term insurance because you're trying to combine two things, and otherwise the insurance, the premium becomes very large.
So you're saying a percentage is invested as an insurance corpus and you get it back as an endowment product after a certain number of years. And how does the interest rates there compare to a usual fixed deposit or PF sort of a fund?
So again, I think it's a portfolio allocation decision, Khushbu. I think it's not useful to compare two investment decisions because life insurance is completely different. It is combining insurance along with an investment.
Got it.
What advantages people need to be aware of is that life insurance also has certain tax advantages.
Yes, I think that was the last insight I wanted to cover. That especially after the new GST reforms, how does the tax implication benefit people now?
Yeah. So there are two elements of tax which is involved. One is, of course, the GST. So till 21st of September, till the GST reforms came, life insurance premiums were subject to GST. Now it is zero. So it's not even just life insurance, even health insurance.
Yes.
I think that's a fantastic decision by the government. It just has, in the people's mind, done away with one element of affordability. They suddenly feel that, okay, it has become cheaper to afford.
Also, I think it positions it as an essential product now.
Absolutely, absolutely. So that's one element of taxation. But the second element of taxation, which is how do the returns get taxed?
Right.
So firstly, for term insurance, absolutely clear, the insurance money which you get on death for your family gets is 100% tax deductible. There is no tax on a claim
Correct.
amount, right?
Of course.
But if you go for the mixed products, which are bundled, which I mentioned, endowments, or
Yes.
the unit-linked products, which are called ULIPs in normal parlance, which combine sort of equity investments with insurance.
Right.
So you can get both flavors. You can get guaranteed investments plus insurance in an endowment, and you can get equity investments plus insurance in a ULIP. Those also are taxed differently. So up to a certain amount of investments, the return is tax-free.
Got it.
Right. So for endowment type of products, if you are investing up to 5 lakhs a year as your premium, the maturity amount is tax free. Now that, depending on your tax position, of course, that's an individual circumstance, is a very, let's say, smart way to plan your guaranteed investments compared to some other investments which might be taxable in terms of slab income. Right?
Got it.
And beyond 5 lakhs, it works as capital gains tax.
So it's a long-term,
So
lesser tax.
in a way, the tax outcome can also be a smart choice when you look at one investment choice versus the other.
Very interesting. So I think there are 3 tax-related implications in life insurance. Udbhav. One is that at the time of purchase, now my GST is nil.
Correct.
So that's a great 18% saving.
Absolutely.
Second is you're saying my claimed amount is largely tax-free in case of death scenario, term insurance. And even others, there are
Up to a certain
mechanisms
level, yeah.
to save tax. Third is really this ATD tax saving. Is life insurance also
Yes.
a part of that?
So, and the old tax regime
Yes.
where all these deductions are applicable, life insurance falls under 80C, which is the 1.5 lakh limit.
Right.
Their life insurance premiums qualify as 80C deductible. Health insurance comes under 80D.
Right.
So, if you are on old tax regimes, that's the third element now to
Right.
reason. And that is a very large reason for people to buy. It used to be one of the biggest reasons why life insurance sales used to go up in March, because everyone is doing their tax planning for the year and they realize that this is tax deductible. Of course, with new tax regime, for some people, this is not a
Anyway, not necessary.
not necessary,
Yes.
but the ultimate benefit being tax free under certain circumstances, I think people just need awareness through such mechanisms. And of course, I think financial products and all, I think India as an economy or a society would take some time, but going for professional advice is sometimes, I think, the best use of certain amount of money you can do, because you are actually letting go of a lot of benefits which can come with adequate advice. So I am actually a firm believer that people should find someone trusted. It doesn't need to be you go to a let's say a fancied advisor, but someone who has done it better, you see.
Of course,
just take
you're not
their
always the
advice.
expert.
Yeah.
So no, great insights, Udbhav. We discussed the foundational reasons, right, of having term insurance and life insurance, and then the 3 insights that really stood out for me are that it's 99% plus
Yeah.
claim rate. Your premium doesn't change, so better to buy it early. And then there are 3 types of tax savings /
True.
implications, which are lesser known reasons why one should go for it. No, great. So thank you so much, Udbhav, for helping us decode the whys of the underpenetration and the whys of going ahead today. Now, just talking about coverage and planning, right? There's a lot of question around people want to go for the cheapest premium, right? Because again, the scenario is far off in the future, and why to spend more today? How do I figure out what premium, what coverage is optimal for me?
Yeah. So there are 2 questions in this baked into one question.
Yes.
One is about the cheapest part, right? And I think I've covered it. Like, cheapest is not great if you just remember that it is an airbag equivalent,
Yes,
right?
yes.
You would not want to get the cheapest airbag into your car and just do a tick mark
Makes sense.
exercise, right? So the reliability, the bharosa of that airbag coming into picture. So that's equivalent to an airbag opening up is equivalent to claims paid
Right.
ratio, right? So you should definitely not look at just the cheapest. Look at the brand. Look at their past performance in terms of claims payments. Maybe look up social media commentary around
Reviews.
it, reviews.
Yes.
Just do those sort of basic checks to do. Otherwise, you have bought the cheapest, but in your mind, you will still not be at ease. Because this entire worry that will my claim be paid is the top of the mind item. And you would not, after having spent, let's say, instead of 25,000, you got a product for 23,000.
Got it.
That 2,000 month an year saving is nothing compared to the worry that will I get my crore or will my family get the crore
Yes.
when the event happens. So cheapest is not the greatest choice to go for. I think
Got it.
that is fully covered. You won't mess up with the foundation of your house, right?
Right.
Now it comes to what is an adequate purchase. And I think this is, and me included, I think at some point have made this mistake of kam insurance lene ki bimari. I think that there used to be a Irfan Khan
Statement, yes.
statement, and I think a brand used to run that. So typically we undervalue, right, the requirement which will arise in our families if we were not around.
Right.
And actually, at some point in Axis Max Life, we had the entire brand or internal narrative of running around that you are the difference or I am the difference. Don't underestimate the value of your life. And it is related to our today's tagline, which is Bharosa Tum Ho. You would see maybe a Rohit Sharma
Yes.
also
Yes.
coming.
That's an outstanding.
Yeah, so you need to have that
analogy.
you are the bharosa for your family and you need to adequately value your life. Now, how do you value your life? It is, in a way, it can be an emotional attachment that, oh, I'm worth 10 CR, I'm worth 20 CR. Of course, nobody's stopping you from thinking that way, but at least if you think objectively, start with your obligations, right? First of all, just easiest to say, take loans. Are you having any loans which are dependent on you surviving to see it out, right? That loan needs to be covered. You can't let it fall to your family to now figure out how to repay it. So all your loans, all your planned financial objectives for your family. So it may be education. Most obvious ones are education, building for a home if you still do not own a home, and of course children's marriage related. These are typical, and then of course you might be planning a certain retirement. If you are not around, at least the retirement for your spouse. So you try to come up with, okay, what is it, let's say 20 years out, if let's say let's say an example, you are a 30-year-old. You have children who would perhaps be going for higher education, and then you would believe
Getting
they should be
married,
on
yes.
their own. So your liability towards your children perhaps ends in 30 years, right? Next 20 years. So I need X amount for their education. If I am around, I will be earning and I will be saving enough. But if I'm not around, that goal can't be compromised. So I need to set aside X lakhs for child 1, Y lakhs for child 2, pay off a certain Z lakhs for home loan, etc. So you come up with a bottoms up approach. This is at least how my life is worth, right? Then of course you need to test it against what we as insurers do when someone applies is against my income earning capacity. So I see, okay, if I'm earning this much, there is likelihood that this life will be able to do this. All things put together, if I were to put a simple rule of thumb, once you have done a simple bottoms up exercise, you would say typically we believe anybody should have life insurance worth 10 to 15 times of their annual salary or annual income. Doesn't need to be salary if you are self-employed. Typically,
Okay, that's a thumb rule.
Thumb rule. If you are very young and you are earning, perhaps it needs to be higher because you have a lot of life left and maybe very little assets. Your mortality protection gap is perhaps
The
high,
highest,
right? Very
yes.
high because you have very little built up and a lot to build for.
Right.
It increases as soon as, so life insurance also doesn't remain static. It changes at different life stages. Typical life stages are, of course, when you get married. Suddenly you have one more person in the family who
To take care of, yes.
to care of.
Yes.
Even if that person is working, you would still have certain responsibilities or you would attach your value to that life. Then, of course, buying a house. When you bought a house, you might be under debt. So to prepay for that debt, life insurance need suddenly changes. Your mortality protection gap increases.
Right.
And of course, children in life stage always is a big change. And at every stage, you should review your life insurance. So typically these 3 to 5 years, I would say you should do a review of your gap. How much am I with all my dependents or all my liabilities building up? How much should I really need, and how much do I already have? Assess your gap and do it. And this is not theoretical. I have done it myself. So I reviewed my life insurance when I bought a loan, got into a loan for a house. I carved out a policy specifically for that. And when I repaid the loan, I stopped paying the premiums. So it's a very scientific way to do it. You don't need to do it. You can still continue. It's a great product to continue. But if in your mind you have segregated, you can easily let go of those decisions. I had my second child a few months back and I reviewed at this stage, and I believe that I am not covered for that. So this time I did not go for term insurance. I went for a bundled investment based insurance because I only needed that much.
So we're actually listening from the horse's mouth now.
And having worked 20 years in the industry, I think
your awareness must be the highest.
I'm not high. I'm aware, right?
Of course.
And and sometimes this value of these products, because nobody else can offer. If you really think this promise is difficult to provide, right? It's a lot of maths and science which goes behind calculating what is required to be paid, etc. But beyond all that, this promise, even from a license perspective, only life insurers can give. Nobody works in this frame which is 20, 30, 40 years. On paper, our longest contract can be as high as 67 years. We can write term insurance to an 18-year-old if that person is earning, theoretically, till age 85. Some people even till age 100. So we are writing contracts into a period where I will not be around.
Yes.
Even the youngster who has joined my workforce yesterday will not be around. But the contract will need to be promised. So this is a difficult business, but a beautiful business to be a part of, because
it lives generations,
In a way, we are providing insurance, if you believe the bedrock thing, is actually the foundation stone for society's resilience. All this thing that in a society needs to be insured is because if you have very little insurance in the society, the societal structure can fall apart, right?
Anytime.
Whenever anything happens. So how resilient a family, the starting unit is a family in a society, right? If the family goes under turbulent times, all sorts of things, right? There will be unemployment or lack of income, crime, and all those things you can study.
Epidemics,
sociology.
wars,
So many things can happen. So it's a nation building activity. Beyond everything, if you see, life insurance is a nation building activity. So some part of your core purpose, the passion you get from this industry comes from that belief that in some ways you are doing a little bit to build the society.
Nice. I think we'll inspire a lot of people to join Access Max Life Insurance today.
Any life insurance is good. No problem.
Yes, I'm kidding. So, Udbhav, very interestingly, you mentioned about these life stages which determine your need for that corpus, and you should keep evaluating it. I'm just curious, in your customer base at AMLI, have you seen certain personas or certain life events trigger this need and purchase? Is there a persona which is more likely to buy, more often buys?
Yeah. So occupation is some cut which we always do to understand our customer segment. Salaried, we find, are more inclined or let's say end up buying life insurance, term insurance more than the businessman or self-employed. India is primarily self-employed, but our term insurance buyers are primarily salaried. So that's a very interesting finding we get. And maybe self-employed, and these are nobody can prove these conjectures, but maybe self-employed are always in their mind looking for a deal, so to say. So this point of it doesn't give me a return is a little more heavy in their mind, perhaps. I don't know. Plus, self-employed always believe that their business won't be over even if they are not around. So
they have a legacy.
They have a larger belief in continuity of their small business.
I think that's intuitive. That makes sense.
Yeah. So they attach maybe a less value to the
money going
risk
away
of the goal not being met to themselves. Although I believe it shouldn't be that low, even if there is some element of it. So that's what we find. We find a typical customer who buys is in early 30s.
Okay.
So 33, 35. It has reduced. It used to be, our typical life insurance buyer is mid to late 30s for, let's say, investment type of products. Our typical term insurance buyer is a little younger, which is a great sign, which is the awareness sign that it is happening. Ideally, you should be buying it by 30 and it's get a very, very cheap premium rate. But somehow, I think it's a journey, it will happen.
Sure.
So age, occupation, of course, natural urban area has better adoption.
Gender.
But gender, of course, males, term insurance, 85% are males.
The insight I never like.
But it's very interesting if you, I can take a moment. So in my role, I look after building the protection business, which is the term insurance. And after you have solved for the low hanging fruits, the real question comes is that who all are still underserved in terms of availability of insurance. And I and along with me, the entire company takes pride in making life insurance, term insurance available to homemakers.
Wow.
So for history, it has always been a belief that it's not an insurable interest. I covered the point,
Yes,
right?
yes. The earning member needs.
You need to have an income to attach certain outgo to your life not being around. And while that is a very cold way of attaching value to life, we said a homemaker not being around is a drastic scenario for a family. So there is value. Of course, there are all these studies about unpaid work, and homemakers add a lot of value, financial value to a household's overall financial outcomes. So we came out with a term insurance which was available to homemakers. And even today, among the other things which we are proud of, this is one area which we really, really believe we are adding in terms of the entire ecosystem which can now
So
buy
it's on
term
a
insurance.
growth path.
Yes, so it's a settled category now in the industry, so homemaker term. And that's a journey we are on. We'll try to see what all other society segments are not having access to term insurance because of old age beliefs or the rituals or rules which used to be followed to understand.
Very
who can
interesting.
have-
And what about life stages, Udbhav? You mentioned your own scientific discovery of which products to buy.
Yeah.
Have you seen that certain life events trigger this thinking, or
Yeah.
is more common as a customer base?
So I think the biggest trigger for any family is child. It continues to be the biggest trigger. I think it will not be unique to term insurance. It will
Yes,
be
yes.
common to
It
any.
is the biggest expense.
It is the biggest. I think suddenly the switch triggers on in
Yes.
someone's mind that, oh my God, I need to plan for something. So childbirth is the biggest
Right.
trigger. Of course, with more awareness, I think marriage turns out to be another big
Got
event
it.
because you suddenly find someone, another person in your life who now is dependent on you.
Got it. And then you mentioned some loans or house purchases, which are
Yeah, yeah.
also one of the trigger events.
There are a lot of banking products. When you take a loan, life insurance is embedded in it. So a large part of your loan liability also gets taken care of through those products. But one can always be a little bit more mindful to ensure that any loan which you have, you should have a life insurance cover allocated in your mind towards that.
Very interesting. So the persona that is sort of getting highlighted here is a person in early 30s, recently married, about to have a kid or just had a kid,
Correct.
aspiration to buy a house or planning to buy a house.
Largely, that would be your
salaried,
typical
yes,
term insurance buyer. Of
in a
course, we
city.
have people buying it into their 40s.
Of course,
also.
there'll be all types of outliers, but that you're saying is a prominent persona in India, which is actually a great sign because it's not like a person in their 50s is thinking something may happen
and
to
it
me.
gets difficult. The
Yes.
premium part I took
Yes.
example of.
Yes.
The more you delay, the higher likelihood that something in your health would have also changed.
Right.
It's just natural, right?
Correct.
With age, certain things will start developing. Now, the extent of seriousness of that would either make beyond age the product costlier for you, because if you are a little unhealthy life, we would attach a higher premium to insure you.
Right. Right.
And if it is actually a further serious condition, it can be as high as that you are above, let's say, 32 of BMI. You are
Right.
on the obese category, and
Right.
it's not a rare thing, right? You find a lot
Very
of people.
common.
Then you might be even disallowed a term insurance. So the more you delay, just the natural age and health progression will make your premiums costlier. The extent of your unhealthy nature can actually lead you to not even getting it.
Right.
So very, very likely that beyond 45, you will find something in someone's health. That's how empirically we have found. So your amount of rejections we do at the onboarding stage when someone applies would typically be higher the higher the age is.
Got it. That's just your underwriting algorithm.
Yes.
And what you're also saying is that it's not just declaration by user. You may also be doing some medical tests to determine
depending on the
age
amount of the contract. If
Okay.
it's a very large contract or the age is high, we might trigger medical tests, which is you might be largely it's home medicals. It's just a normal blood test which we do.
Right.
Very high sum assureds might also require elaborative tests like a TMT or a in person, which you require to visit a lab, but that's not a very common occurrence.
Got it. And the determinants of the premium itself are what you're saying is age and health, right? There's nothing
Age
to do
and
with your overall number of dependents or your liabilities, right?
That
your
actually translates into the
sum
amount you
assured.
bought.
That's just the science of it.
Yeah.
But your premium is determined by your age and health. That's it.
Correct.
Great. So now coming to health, because we touched that topic, and a very interesting one given, my profession, Udbhav, is that a lot of people think that, health insurance is more intuitive for them today. Although they're also, we work with a lot of health insurers. The penetration numbers are abysmal, although getting better. But have you seen adoption of certain health riders, health-related add-ons to term insurance, which make it more attractive today?
Yeah, absolutely. I think with time, our term insurance products comes with the element which we call the riders.
Okay.
So while the base contract, the base promise is of course the term insurance promise, but everybody likes a little complete story. So we say, okay, it may not be a death which may happen, but even a large health adversity
Right.
can still happen, right? So we call it critical illnesses.
And that time I need some corpus
Yeah.
of money.
So this is, let's say you get diagnosed with cancer
Right.
or a severe stage heart attack.
Right.
Typically 3-4 large critical
Right.
illnesses,
Stroke.
stroke.
Yes.
Yeah. So these critical illnesses now at that point, your health insurance might pay for your hospitalization.
Right.
But very likely that there will be expenses beyond that. Either your health insurance may run out, or you might have absence from work.
Right. Disabilities.
You might have a, let's say, 1 month recovery period,
Right.
etc. Or you might have need to pay for care at home, etc. You can't predict what sort of help
Correct.
you might need. So the rider, which is the critical illness part of our product, that also pays then an amount on diagnosis of that critical illness. So that's something we call living claim. You can still you claim while you are still alive. So in a way, it's similar to health insurance. Health insurance, which is the medical insurance you buy, pays for the bills.
Yes.
It will be up or down depending the amount you have incurred. This is adds on to that. This gives you money in hand to deal with any large additional expenses which you may have.
And you reduced it from the final payout eventually, right? It's just a part payment.
Both designs
designs
exist.
are there.
Some reduce from the sum assured. Some is additional. So
Great.
both designs are possible.
So then there is a lot of flexibility,
There
right?
is.
Basically, there is term insurance, and then you can have an endowment added, which pays you a sum, say after 20 years if you're alive, and then this critical illness rider, which
and even in the health part, the critical illness part, there's a very beautiful option which people have, which we call waiver of premium. So in case you get diagnosed with, let's say, a critical illness, which will of course put you under financial stress. So
Right.
while you may get a lump sum amount at that point from the critical illness rider to pay for expenses,
Right.
but again the continuation of your base contract might also become difficult for you.
correct.
Right, the paying that premium every year on year, and at that point people tend to cut out as much as possible
Right.
from their expenses. So this there you can buy a rider also, and it's very cheap to waive your premiums after that.
Right.
So let's say 3 years into you let's say bought a 20-year policy or a 30-year policy. Let's continue with our example of a 30-year-old buying to cover themselves till age 60 of their earning
Correct.
life. And 3 years into the policy at age 33, let's say you get diagnosed with stroke or cancer. Now 27 years of
Premium left.
premium left. This rider will waive your 27 years of premium. The contract will continue till age 60. The company will take care of your
Wow.
premiums.
Wow, that's an ultimate bharosa.
So there are lots of things which are available, and I don't let's say mind people actually getting confused by it. There's a lot of complexity also in people's mind that life insurance is so much choices. How do I choose?
And who does one go to demystify this, to really share your story, your life stage, and design a policy which is most personalized for you? Who does one go to, Udbhav?
So see, there are multiple options available. So you can, if you are, let's say, financially evolved in terms of your understanding, you understand a bit of these elements.
Right.
I think online there is a lot of content available. There are a lot of let's say YouTube videos, influencers available, which we do keep talking about this stuff.
Right.
Of course, linking it all together still becomes difficult, and that's I've come back to the point. There are a lot of financial advisors available. Do invest in financial advice, but even adding these cherries and toppings and all is useful, but at least getting the base cover is not difficult to buy. You just buy a simple one and get your journey started, because as I said, it is not a one time done all. You will anyways need to review it every 3-5 years depending on the life stages. So don't delay the starting purchase because you believe I haven't understood all the options available to me. The basic contract is a very simple contract. Get it done with as early as possible, and then when you review it maybe at the next instance, then try to get a little bit more added. So,
right. I'll be very curious to know the number of ChatGPT queries on life insurance also, because whenever now complexity hits the human mind, we go to AI to make it personalized, rather than
that's also one source to
yes.
get some
I'm sure
answers.
I'm going to try. Okay, great. So now just talking about the new age life insurance experience, which was also our broader theme of today's conversation, Udbhav. We've seen that life insurance overall has been a little bit of a boring, low-touch subject. I often tell my partners and clients that if you ask 10 people who have life insurance, that which life insurance product particularly you have, brand and product mix, they may not be able to give you the exact mix. While they will have everything of what they wear, car they drive, the restaurant they go to on their fingertips, right? So how is Access Max Life shifting this narrative of making this a more known, exciting, engaging product?
Yeah. So you are absolutely right. At the core of life insurance promise, that contract is very few transactions, right? You as a individual who has bought the policy just needs to ensure you may keep your promise of paying the premiums on time.
That's once a year. So maybe 60, 70 instances of interactions.
If you have monthly, you can choose the monthly options also, but those are anyways converted into
annualized premiums.
Annualized premiums, or it's a bank mandate.
Got it.
So you will not even feel
auto-deduct.
You will not even standing instructions. You will not even feel engaging with the company. So the premium part is not even felt, or at least felt maximum once a year. And the company oriented part hopefully should never happen.
Right.
In a term insurance parlance, hopefully the airbags never need to be deployed. So in a way, the contract is meant to be low touch from a, let's say, concept perspective, and that's how it has evolved also. Right. Now, but of course, world is changing. This is not a great sign if people don't even remember who they have bought it from.
Correct.
Of course, the product name nobody remembers, and it's not really, doesn't really matter also. You should know whether you have a term insurance or an endowment or a ULIP, and you should know which company, because your nominee will need to know, right?
Really, yes.
So your nominee anyways needs to know where the policy contract is kept, etc. But beyond that, we believe that anyways, customers are the most important stakeholder for any company.
Correct.
And being involved in their life a little bit more rather than just becoming a claim-oriented interaction to a regular life stage interaction is a natural progression for any industry. And we also believe, because customer continuing with their contract, which we call persistency, how persistent are they in paying their premiums, has equal or a lot of value for the company also. And of course, engaged customer then buys from you another product, and the policy density, the people having a term insurance will buy a health also from you. They might buy an endowment also from you. It just makes sense for everybody. But how do we do this? What can keep a person engaged with life insurance beyond the renewal premiums and thing? Because we do not do living claims.
Correct.
right? So a car insurance, or you might feel every 2 years or 3 years. A health insurance also another every 2 years, 3 years.
Correct.
Life insurance, if at once you feel, you don't feel, your
Right.
family will feel. So in this space, a lot of attempts have been done globally in terms of how do we get involved in a person's life beyond the claims. And that's where this entire concept of what we call wellness overall coming in, which we are on a journey along with you
Yes.
for us. And it's very intuitive if you really break it down, that we are interested in a person not needing to claim on their,
Right. As a business, yes.
as a business, of course, and as a society also. And the
Yes.
person is also not interested to make a return at an
Right.
ROI.
Right.
So it's in joint interest to ensure that the person, after we assess them initially, continues on a healthy path.
Correct.
Right? Not how do we do it. So it's not our natural strength. We are not healthcare providers otherwise as life insurance, but at least minimal attempts which we can do to speak to our customers more regularly on health matters. And if we do able to find some issues which have developed over the period of life, anyways, as I said, our promise remains intact. It's not that if we find something has happened to you,
Your
let's say you've
premium
started
increases.
developing diabetes or hypertension 5 years into your policy, we will either cancel your contract.
Right.
We can't do it, and we will not do it. That's not the promise. Nor will we say, oh, next year you pay a higher premium.
Correct.
So maybe that also in some people's mind might be a worry of sharing, but it is absolutely black and white. Nothing can change in your contract once it's written. But if we have found out about something in your health condition, if we can then engage with our customers to be, first of all, drive awareness. Not many people are even aware they have become diabetic.
Yes.
Right? That's
Yes.
It's a very surprising fact. So if we can find out that, and at that point have a mechanism to engage with them on their overall health, naturally they will benefit from it. We will also benefit from it, having more engagement, more persistency for our customers, and of course our insurance outcomes will also be better. So that's the journey. It's the second level journey which we are on, along with being the primary term insurance provider in the country. How can we then move the next step of having wellness also inbuilt? And in our latest term insurance product which we launched, health management services is part of the product.
So, Udbhav, you said it right. Our core belief at Zyla is that, the human has to be at the forefront, because eventually you want to be treated by a human.
Absolutely.
Technology has to do the magic in the back end,
Yeah.
How I store your data, how I make sense out of it, how I personalize the next nudge.
Correct.
Or a health plan for you. How do I ensure that your next step is fulfilled well and you take that step? Is all what technology can do the best.
Yeah.
But can technology inspire you to take action towards your health? Short answer is no.
Yeah, so it's
In
like,
many
when do
cases.
you make the technology
Yes.
become into a human?
Correct. So the
technology
forefront has to be human. Healthcare has to be very human is what we believe. So great, Udbhav. Segmenting into our last, topic of discussion today, you did mention that, your highest sort of tenure of contract is 67 years, and 18 years is the minimum age when one can buy a contract. But now we're all talking about longevity and
Yeah.
super drugs and super gadgets. So how does that theme of longevity change your construct of life insurance, premiums, and other things?
Right. So yeah, you actually are touching upon a topic which is the other part of the business which I look after, which is, in one way, I'm living in two boats, right? So one is, as a society, we have a responsibility of protecting the risk of dying too young, right? When the gap is high and my responsibilities are still left. But equally, like, India has the biggest young population in the world, but 5 years out, 7 years out, it's projected to have the maximum senior citizens also.
Right.
So in a way, society, and that's longevity, life expectancy, I think, is in early 70s now, projected to cross 75 in a few years. So, and all of it is the health advancement and all, which India will experience. So as a society, the second biggest risk is now the risk of living too long, right? So you save up a certain corpus for your later years, and you sort of start dipping into it because the inflow is not coming. And it's a big worry in people's mind of living too long and then running out of that money. So, which is entire question of retirement planning. So we believe that as life insurers, we have a big role to play in this part of life also, because, as I said, we have the relevant let's say, building blocks in place of working for long durations.
Right.
So we can also help with long-term retirement planning, which is in addition to what you would normally do through your other investments. So it's all, everything has a part to play. There is no one solution to all your life problems. So at retirement stage also, if you need to plan for longer periods and you need at that stage some certainty, so the guarantee part of the income, it can actually be delivered through life insurance contracts. So there is a specific contracts which we have, which we call annuity contracts. So these annuity contracts, let's say typically you buy at age 55 or 60. That's the large persona of people who buy this. It guarantees you an interest income till you live. Till you live. There is no end point to these contracts, which is a very powerful guarantee if someone understands the financial reality that as economies mature, become larger, interest rates in the economy will fall.
Right, but this is guaranteed.
But this is guaranteed. So we are, let's say, leveraging our investment expertise, having a very large, let's say, assets under our base. So that's all the financial engineering happening in the background. What it means for the end customer is that I don't need to worry about the risk that tomorrow when my, let's say, an FD matures, interest rates have come down. Like I've seen my parents also, complain that interest rates and FD rate, if you will look up over the internet,
has gone down.
10-15 years back, you could get FDs at 9.5%. Today, a senior citizen FD would be at 6.6%.
Correct.
And a week back, RBI again reduced the interest rates down. So interest rates are going down. You look at global examples, China, perhaps
US.
we like to compare. Interest rates are around 2%, 2.5%. And naturally, it's a matter of time as India grows, interest rates will come down. The speed or the time is perhaps anybody's guess. But interest rates won't stay at the current levels.
Right.
Now, if you are exposed to those low interest rates and your entire source of income in retired life is interest income, it's a big worry. So there is a need for certain product which can today itself guarantee you a certain amount of interest income through your life.
Got it.
So I naturally see as India ages, the need for such retirement oriented products to come, and every economy globally has gone through that need. So there will be a need for long-term care products. Of course, long-term care that you get a financial support when you move into a long-term care facility, etc. Those are societal changes also. In India, it's still a little further away where there are old age care homes being a prevalent norm. But there are products as a society matures which life insurers can help with, is supporting you in those diagnosis and prognosis once it happens that you need assisted care and all that.
Got it.
Products which work at that life stage, it's not right now relevant, but it's not too far also.
Got it. And the other theme in the market with the modern living is use of gadgets, our digital footprint, our footprint on social media. Are any of these things being used for underwriting of premium or otherwise in the customer journey?
So this topic was very hot at some point, that wearables will become the source of health information.
Data, yes.
I don't think the adoption and the consistency of data is still at that level where we can make decisions basis that health data. We haven't found it accessible to us in that form. And anyways, this is personal data. So there are all this requirements about consent, whether we can use it, etc. So it's theoretically possible, but I haven't seen it practically used. But of course, the entire social media persona, which is available publicly for certain personas or certain size of policies, we do look at social media, let's say presence, the kind of network which people have. But that is more a profile underwriting. For health underwriting, I think the health data is very sensitive and personal. We would like to take it primarily rather than through secondary sources.
Got it.
But in case India were to get all this Abha and all get digital, that health stack when it develops, and just like Aadhaar, if it gets enabled through public ecosystem.
So you just give an OTP authentication.
Yeah. But I think health being a sensitive matter, I think we today do not utilize any of those.
Right. So it's more of a hype than a reality today.
Yeah. I don't think wearables has been that adoption has been that high that
Right.
we started.
Yes,
using.
I also think because of the nature of the data itself.
Correct.
And now DPDP, right? You can't
Yes.
really use it without consent.
Consent, yeah.
Got it. Great, Udbhav. This has been a fantastic learning experience for me, and I really didn't know where the hour went by. But any last piece of advice you have for our audience today that you would like to share?
I think the advice I touched upon it during the our conversation also, that don't think twice, get term insurance today. And if we can actually start this trend of tag a friend, which used to happen, right? Tag a friend who doesn't have, and let it build organically.
Because this is what the nation needs.
Yes,
great, Udbhav. Thank you so much. It's been a pleasure hosting you, and of course knowing
it's
you.
It's a pleasure meeting you
over the years. Thank you so much also for your trust in Zyla and for coming today and sparing your valuable time for this conversation.
My
Udbhav.
pleasure. I had a good time.
Thank you so much, Udbhav. To our lovely audience, we'll meet with many more such industry leaders who demystify the complex topics for us and help us take the right decisions in life. So thank you again, Udbhav, and we'll see you again soon. Bye-bye.